All right, let's jump into it. Where we are? It's on the 3:43 on the 12th, so on the Saturday. Typically, I end up doing these sort of weekend reviews and that about 10 o'clock on a Sunday night. I mean, main sort of thing is it's done obviously sort of after markets close on the Friday, before markets open on the Monday. That's the main sort of thing for it all. But yeah, got a few things on this weekend, so I thought I'd try and sort of, ooh, excuse me, sort of knock this out a little bit earlier. Sorry, just having a drink out of V, trying to sort of wake up. Um, so anyway, on with what we're doing. So yeah, just doing a little bit of a recap. Have a look over sort of how the market sort of finished up for the week and that. See if we can pick out some ideas and trends for the week sort of coming up. I'll start off with gold because was just such a like perfect trade basically. We've been short side all the way down here to 2600. These profitable. This sort of period of this sort of a trade sort of period, and it was just very profitable. Worked out very well. We've had buyers step in pretty much on cue. That last push down actually came to 2601. So within $1, and we're talking from sort of like, I got my last sort of longs off up over here at like sort of a 2680. And I've just been short through most of this period through here, maybe some longs through this period on the breakout. But beside the point, what we're looking at here is mainly just this more recent part here and the overall structure. And as you can see, we were shoring up a little bit of a sort of a channel. That's what gave us this 2600 level for the drop down here. And really, after was it CPI on Thursday? Yeah, Thursday night, and that CPI and that it really just sort of it took off because it wasn't just the CPI that came out then; it was the unemployment claims. And I covered this on the day as well, but it was basically like you had the two mixes of the data. You had CPI, which did come down, but not as far as people, well, the market had sort of expected. So technically, what they would have been calling pricing in for it all. So that could lead to a little bit of US dollar strength, just on the basis, not so much that, look, I mean, look, CPI was still coming in the right direction. It's not like, oh, inflate, like, because remember, they're still, at the moment, they're gauging how that 50 basis point cut is impacting the market. That's what you got to remember with what we're looking at the moment and how the flows are going. The idea of how the market will move based on the data that comes out is to see, okay, they've done the 50 base point cut. Now, have they done that at the cost and expense of inflation going back up? And if it had been higher, well, they would have sort of gone like, well, geez, wow, we did 50 base point. It was obviously too much. It was unnecessary. People are priced for sort of like extreme sort of dollar weakness. Obviously, they don't want to sort of have a flare up in inflation. So it's more likely that they're going to sort of hold rates or at least cut at a lower rate. Um, that didn't happen. So we got the inflation. So I'll flick across the news so we can actually have a look at it through this period here. But this was the CPI here, and as you can see, it was 2.5% previously. They were pricing for 2.3, came in at 2.4. Excuse me. So it is moving in the right direction. So it just wasn't as, I guess, quick as they had sort of technically been pricing. So that could see a little bit of US dollar firming up, a little bit of strength just based off this. It's not sort of US dollar strength rocket to the top side because it is still coming down. It's just at a lower rate. So they just need to sort of peel back the positions a little bit to account for a 2.4, not 2.3. However, at the same time, you had unemployment claims coming out, and as you can see, this was a bit more of a shocker of a discrepancy. They had 225,000 claims last month. They were only expecting to tick up to 231. They came in at 258. Now, 258 sort of, oh, wrong one. 258 spells a bit of trouble. Well, it comes across that way, basically, because if you think about it, if they're sort of like, oh, well, we've had the rates up so high for so long, we've cut 50 base point to try and help stimulate the economy. Well, maybe we're behind the curve. Maybe we've left it a bit too late because look at all these people that have just filed for unemployment claims. See, it's a bit funny because you would think like it's only been a couple of weeks since they did that 50 base point cut. It would take a little while. It must have some sort of lagging effect to actually flow through to the markets. But that's not how the market will work from it all. And that's why sort of we saw that sort of actual larger discrepancy to the negative side kind of outweigh the US dollar, outweigh, sorry, the CPI. And we saw this fluctuation up here. I mean, DXY still very much up in this top area over here, hasn't sort of broken down as of yet. I'll get to this in a moment, but that's just a bit of a sort of a broader idea of it all. So obviously, sort of with gold, gold 90% of the time it's running inverse to what the US dollar is doing. Occasionally it'll run sort of in sync, both up, both down, whatever. However, DXY maintained flat, but as you can see, as DXY maintained flat, put them side by side here. As you can see, DXY is sort of flat through this area here. Let's put them onto the same time frame. So both on 4 hours. DXY barely moved. It up, down, but this is pretty much just, sitting around 2.9, goes up, gets sold down, goes down, gets bought up. It's just remained flat. But at the same time, you can see that, these little dotted lines up and down will match up the times. Gold just ripped up. It just ignored it, and it just sort of moved straight up to the top side. So, DXY and sort of gold are a little bit decoupled in that kind of sense with it all. So let's go back onto one chart. So what we've sort of seen, obviously, towards the end of the week here, we've had basically, it's respecting the chart very well. So this is where was it? On the Friday morning. So this is around the point that we were at. And I said, look, most likely we're going to see this test and this move through here. We obviously sort of went up from 24, coming up to 45. We did get that reaction. And this is what I was saying, that, look, once we come into this period, expect this little sell down period here. I missed this pullback, which is a little bit frustrating, but that's the name of the game. I had my entries at where was it? At 35, and as you can see on the pullback, being this candle just here, got to 36 or 36.5 or whatever, 36 and change. So I missed by $1. Sold here, sort of rode this part through. Actually, sort of rode a lot of this part through here. Came back here, missed the re-entry down here, and away it went. And that's fine. Look, you know what? Week was pretty good. I was happy to sort of just let that sort of go. I had a couple other positions in other things, which were sort of making up for it all. But it would have been nice to get that flow through there. But we did get price action as we expected. As I said, these sort of little dotted lines that are put out here aren't necessarily like, okay, it's going to come to this cent. This is just showing the general flow of it. We were coming up here. We had this big sort of falling resistance coming through here. As you can see, every time it's come up here, it's been smacked back. So, we were bound to see some sort of reaction here, which is what we got. But the fact that then even after that, it shook it off and pushed through to the top side to finish quite strongly, that's saying that it's sort of like, gold is definitely back on the bid. We did have PPI last night as well, and that did seem to sort of move the market around a little bit as well. So this is probably partly the reason we saw a continued strength in in gold as well. So we can see here with PPI that sort of like, it was the core PPI came in line, but month over month basically came in lower than expected. So they were saying, okay, it ticked down, that's fine, came down even further. So again, you need to have the market readjust their positions for the new set of data that's just been presented to them. Again, whether this is truthful or not, because a lot of the stuff gets revised and yada yada, the market will move off what's presented. Whether it's true or not, that is the numbers. You need to take it for what it is as it gets printed, and then you can work your positions out afterwards. But let's flip back onto gold here. But the fact that PPI, which is the producer price index, was down and down further than I expected. Well, if you sort of flow that down, because remember, that's the producers. So the products, the inflation and the levels that they're paying, excuse me, for the raw materials. So then that cost, generally, if the inflation is up there, you can kind of think, well, downstream from that is the consumer. And so if the inflation is up with that, then no doubt in turn the consumer price index, once the products get to the shelf, get to the end user, that the price is going to be and the inflation is going to be up for them as well, and vice versa. In this case, it was down, and so because it was down, well, there's less likely a chance. It's not saying that they won't, but it is more in the sort of camp where the Fed are more likely to consider the possibility of doing another stronger cut if other data, third tier data, GDPs, retail sales, these kind of things support that move. And if they do a larger cut, that's weak for the US dollar, which in turn, bang, bullish for gold. And this is why we got this last little move here. So we've got this technical little channel, the technical breakout. We had the pushback, it overcame it, and pushed through to the top side. And that was more like not only just a technical break there, but it also had a bit of fundamental backing. So look, it closed very strong. It did close exactly like I say every time in that. You sort of think, where have the sellers been previously? Well, you can see here, and this is why we had this marked out. And this is exactly where the sellers decide to hold it, or the buyers decided to stop sort of pushing it coming into the close of market. And you can see, obviously, I say this every week, but disregard the last candle, or you know what I mean. It's the last couple of hours and that sort of before. Before the weekend, nobody's at their desk except for like maybe a couple little interns in the US. Asia and Europe are obviously definitely well gone by then. So, you disregard that last candle there, but it closed very strong, very bullish. Let's have a look at it on the daily. I mean, as I say with these things, typically when you're going to see a turnaround, you'll see a sort of a tightening of the candles. This is very bullish. This is very bullish. You know what I mean? I would say we've got the RSI. It's perfectly set back. So this whole area through here where we came up and put in all-time highs, this has just been a holding pattern, really, a consolidation, pullback, and now we've got the breakout, and we're charging through these levels. So, a daily close above 73 is going to be like, okay, where are we going? We're going to the next level. And with this, you could potentially almost be looking, look, it's a bit hard to call this one. I would probably say that this would be your sort of little post here. If you were to say that this ends up to be a bit of a flag, so I'll be matching here, and say that's your breakout. Well, that's gives you 27.38. That's a fairly decent jump here. And I'll get to a couple of other things because there's a couple of other things that are lining up like this as well. So I wouldn't be surprised. I mean, look, it's not going to be a direct push through. It is going to be, you are still going to find some resistance around these levels. But at the moment, as you look at this, we do have a bit of a flag, a consolidation. A breakout will come with confirmation above 26.74. So if we get a close above 26.74, then you realistically are looking for 27.40, 27.30, 27.40, this level up here. Let's make it a little price target. So moving forward, this could actually sort of see definitely a big sort of run coming the next couple of days. And as I said, look, I'll get to DXY in a moment. I do think DXY is due for a bit of a pullback. That is going to be the thing that'll give it a push up here. And this is the thing with these charts, and what I call cross-chart confluence. You see all these things happening with the flows, all moving at the same time. And realistically, I think, look, as I've said a couple of times, and I'll get to DXY in a moment, I think we've got a bit of a pullback coming on DXY to retest the range that we were in before with the breakout back. So again, with a back test of that range breakout, which we haven't had as of yet. If that comes, that looks like a perfect sort of flow to get us up to this sort of 27.40. Then say it bounces off that, that's a good time that you might see the flows come back out of gold again. But again, look, we'll deal with that when we get to it. The here and now is this little period through here. It was a very strong sort of break, closed very strongly to sort of take up all these candles in two days. 1, 2, 3, 4, 5, 6, 6 days of coming down, back up in 2 days. RSI is set, crossed over, very marginally, but still is crossed over. It's oversold. It's ready to push up. If this gets on, if we sort of see, like say, Monday morning, we get a little bit of a pushback here, grab a little bit of liquidity, and then we crack over this 61 level, then you're looking for 73. I mean, we're only, where are we at? 57 now. You're only, $20 off, like that level to sort of say that, hey, look, that's a breakout candle. That's when gold gets moving. You can see this move down here. This was from sorry, look, 58. 1, 2, 3, 4. Yeah, I mean, it just sort of stuffed around a little bit here, but even if you just say to here, that's $100 move. 25.58, 26.58. So that could go $100 from bottom there. So $100 from here just takes you just over 27. This is very, very much lining up like it could sort of be moving up to 27.40. So definitely be looking for metal buys. sort of come the early week, we get any little pushbacks back down to say 40, 41, these kind of previous levels through here. If we get a little bit of a deep pushback there, particularly once we get a pushback, if we can then sort of push down early, then come up and then flip the candle on the daily, I think that's going to be something that's going to be game on, and we're going to sort of be seeing definitely a test of these little area highs up the top over here at sort of 72, I think 80 or something, 86, 85 was like the sort of the all-time high. So they're the two levels that you're really sort of paying attention to, you know, through here, and then obviously it was 85, so through here, these kind of bits here. These don't really work with this thing. Kind of make them even smaller. No. Anyway, they're the two sort of levels that we're kind of really looking for. You get above 85, let's put an alert on that one and say it's a new all-time high. New all-time high. Look for close up here. Look for a measured move toward 27.30. Go on the side of err on the side of caution and sort of give the lower part of that target. But that to me is very much a break, consolidation, pullback, and ready to go again. If we look at just this move through here, where did that come in terms? Oh, let's get rid of this one. Pullback in terms of this move there. Call from this one down here. Take that to where did 85 go? Just through here. So bear with me. Yep, there it is. And as you can see here, coming back 61%. So these things can definitely still have deep pullbacks and sort of still move a little bit higher. I mean, we picked 2600 because it was a 38% pullback of the larger move up through here. But if we look at this as an isolated segment, so we say flag, consolidation, break, which we've got the break now, we're just looking for confirmation, and these are our confirmation levels. That's a 61% pullback, and we know 61% is quite a strong level for these things to react from. And as that sort of pushes through, as I said, close up above sort of 2670s, I think we're very much looking definitely sort of new all-time highs. 2700 is going to see a little bit of a pushback, as we know that you know it's just a big round number. But the measured move of this little flag takes you up to 2730. So I'll be looking for buys in that sort of moving through here. I don't think we're just going to go up this and then all of a sudden come back down over here. If we see DXY run a little bit, I think this could sort of see gold sort of, you know, chug a little bit through here. But as it is at the moment, this reaction is very strong. And as I said, it shrugged off what DXY was doing. It's not really sort of running in tandem with it. DXY is basically more or less flat. Gold, they're still buying it. So if they do sell off DXY, you got to think, where are those flows going to come? Like, think about it as in, like, you know, all the flows, all the sort of money that's sort of propping up DXY. If they sell that off, where are they going to go? Like, it's not all going to go to one source. It's going to be dispersed around the whole market, the entire market, with the different instruments. But gold is a very strong place. As I said, 90% of the time, inverse relationship to DXY. If they're already buying gold and then you sell off DXY and you've got a bunch more money, it's going to go to euro, it's going to go to pound, going to go to Aussie, these kind of things. You'll see those sort of crosses move, but a segment of that is going to go to metals as well. So if they're already buying gold and then they sort of sell off DXY, so it's more flows on top of the people that are already buying gold, that's the catalyst to see a double strength move basically, or two, not maybe necessarily double strength, I don't know, however you want to call it, but two sort of streams coming in, the people that are already buying it and then a whole new lot of sort of capital come in to buy it. And I think that'll get us up to 2740s, 2730, 2740. We'll follow that one out, but that's looking like a very nice sort of technical setup in that at the moment. All right, so flip across. So we do have DXY coming through here. If we have a look on the 4 hour, this is what I was saying on Friday or whatever it was after CPI. We had this sort of measured move of this little flag through here, came up here. We could see this pretty much hit it just a couple of cents above, 23.13, 23.14, came up to like 23.17. So out of there, hit the bottom side of our price target. So I don't trade diamond tops. There's certain technical things that just, you know what I mean? I just don't trade them. I've never had any particular good experiences with them. Like, you know, maybe I think I'm seeing it, but I don't. But I do know the idea, like with a lot of these technical things. And this is what I was saying coming into Friday's session, that typically with these a textbook version of these diamond tops are a sort of consolidation period, wild flows up and down, and then a consolidation period out to the other side. So I do think that we are seeing this move about to come with DXY, but at the moment, up and down, and bang, it's more or less just flat. And that's all I was saying. So this is why I was saying with gold that if this does roll over and this does come down and diamond tops are reversals, then that does lead you to the idea that that flow will then go into gold. As I said, I don't have a great history with these sort of things. I don't use it. I don't think it's really that. Um, I don't know if it's just the markets that I trade or whatever, but it's just I've never seen it really sort of play out a great deal. It's just one of those things that is around. However, if we ignore that and we look at sort of what is actually happening here, we've seen obviously we've hit the price targets. It's tried to sell down. Buyers are still stepping in. In terms of a sort of 4 hour, well, it's given RSI enough time to sort of come back here. So it does sort of go, okay, yes, look, we may see a push up to the top side here, but even if we do get back up here, obviously we saw quite heavy sell downs and that, you've still got this whole area through here where the market was super, super very happy to sell it, and a couple of big attempts back up into this area that they sold it down. So it's again, it's like only just touched it once. Even if it does break up, we're not going to necessarily see this move up over to say 104 straight away. Like I think there's going to be a hard sort of move for it to get through there. Sorry, just 2 seconds and back. Um, so yeah, look, I mean, again, you can't say that it's definitely rolling over because as it is right now, it's just flat. I think what you kind of need to do with these sort of periods here, I've still got this alert down the bottom here, which I sort of set up, and I said, look, if we come down under through these lows, which was this is like the CPI flick around and unemployment claim flick around, if we come down under that alert, that to me is going to say, okay, that this is a bit of a sort of failed breakout. But I think sort of you could almost, you probably just, you'd have to make it fairly wide because, look, you could say, if you want to do a little bit tighter, something, actually, let's get rid of that one. No, let's do this. Yeah. You could say something along this line here and sort of say that, look, a close outside this box could sort of give you a bit more of a direction. And we could sort of say that, okay, close down here. However, because it has come out here a couple of times and pushed back in, I'm not a big fan. It's just a bit too tight for me. I would say I would want bigger. I would want something like this to say, yeah, look, just, and that's only just picking this almost random of it all. I would want a close significantly out. And when I say significantly, it's only 10 cents. I get that. But in terms of how tight this range has been, I would want something like, you know what I mean? If you just go off the bodies, that's super, super tight. And very much, this is the kind of thing where you'd see something like a candle would come down like this. And then you'd see something like this. You know what I mean? Like, so if you only got something just a little bit out of it, although, yes, technically, excuse me, although technically, yes, this is a breakout and it's closed outside the box, it feels like very much it would just reverse back up. So for me, as I said, downside, I'd really want to see a takeout of this wick to the bottom side here. And if you really wanted to be on the safe side, you take those top two wicks. And I would say that's what you need to see. You need to see that sort of the segment of the market that obviously is happy to sell it here, happy to sort of push it down. The segment of the market all through here that's happy to keep it elevated and buy it back up. You want to see that they're gone. You want to see, not this one, you want to see this come significantly down. You want to see a push down like that. And that's when we can say, okay, yes, it's rolling over and you can start to look for something to this effect. But I think till you get a close, like say through this area here, so say below 102.70, I think it's very much could still push up a little bit higher. We do know that that's what DXY does. It looks like it's about to die and then it kicks back up. So you want to be super, super sure, because if you look in the past of DXY sort of turning around, and you got to go to the tops of the trends, these kind of things up here, it doesn't die or swap quickly. Look at this is on a 4 hour, but this is like coming up and up and up and up and up and up, and it's down, and then it's right back up, and it's down, and it's right back up, and then it's all the way down, and then way back up to the very top before it actually starts to roll over and die. Same sort of thing up over here. It comes down. Oh no, put in a new technical high. It comes all the way down. Oh, there's a big lower low, and it's back up again. And this is why I keep saying with these sort of things, these markets, if you're too tight with them, they're gonna rip you apart. They'll rip you apart mentally. They rip you apart financially. So you want to try and sort of wait till you've got an actual move where we've got a little bit more of an idea that it is actually happening, and it's not just yet one more sort of fake out move. And then hold on, wait, they sort of have some stupid headline that happens to give them some reason to do this. You know what I mean? And you just get caught out with it all. So I know it's a boring, maybe a little bit more of a boring way to do it, but it's a safer way to do it. And the thing is, because DXY is so strong, it's not an easy thing to turn around. That's why it takes, multiple days, weeks and that to turn this thing around. But when it does turn around, look at the trends. You know what I mean? Like, it took all this time to sort of get this thing to move over. It's going up, 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 bang. Like, these are some big trends that you can get happening through here. So look, I do think there's the chance that we could see it sort of pop up. As I said, if we get sort of like, strong economic data, that could be the thing that sort of they go, hey, hold on, wait, you know what? Economy's okay. We have done the cuts. Inflation's not too bad. You know, or maybe sort of like, sorry, yeah. So you need something that supports the idea that they wouldn't have to do another mega cut. So if the economy's okay, then they don't need to do another cut. If inflation is up, we just had inflation the other day. If inflation's up, they don't need to do a mega cut, or they can't do a mega cut. So they're the kind of things you're trying to sort of look for. But that's the bigger picture. In the here and now, as I said, a close underneath 270. I think will give us a little bit of a bit more of a sort of confirmation that we're coming down a little bit lower. As I said, even if we do push up to the top side here, I think we've got limited amount of time with more US strength. There's some very keen areas for the market to sort of sell it down from, should it decide to push up one more time and try and sort of go through to the top side. So I still think that, gold's looking like it wants to break higher. I think that's going to sort of weigh on DXY. As that does come back down, though, as I said, this is the flow. If you get DXY coming back down here, retest the top side of this big falling resistance, because this is a breakout, remember. If we see a retest here and then sort of a move off here, this would give time for gold to hit that measured move price target. And this won't necessarily move like this, could move like this, could move like this, whatever. It's a general idea that it comes down, retests the top side of this falling resistance. That could give gold to hit its price target. And then obviously once it's hit its price target, the flows come out of gold. Well, okay, now US dollars trading at a discount to 2 weeks ago, and it starts to move again. So that's the thing where I think the flows will come out of US dollar into gold. Gold hits its price target, comes back out of gold, and the flows will go back into US dollar. I think that sort of both line up with a plausible thing. That's the idea. Wait for the confirmations and then trade it as it is confirmed. Aussie is holding the bottoms here. Look, it took a lot to get through this little 50 line over here. Sort of comes through Friday. Sort of tested it a number of times, and that. Didn't get my sort of 90s feel, which I would have liked. I did trade Aussie a fair bit to the long side through this period. And as we can see, sort of coming out to the end here, it didn't quite break as quick as I thought it would, but it did break and it did push back down. So again, these things sort of like, with the technical side of it all, they are respecting the chart, because as you can see, there's sellers here, sellers here. We've got the sellers here, bang, first time in a while that we've touched this falling resistance, and sellers have stepped back in. Again, don't put too much stock in the last hour of the week. However, look, if this sort of holds this 50 line and then sort of breaks above, it's a pretty tight sort of range here. It's only sort of 15 points or so. If we do get above there, I would also like to sort of see it above say 67, call it 67.70 to be on the safe side up to the top side here. Above 67.70, I would say that, look, you're probably sort of free of this sort of pullback area. It's stuffed around with this big sort of channel support, and we could be seeing a leg to push back up over here. Now, as I sort of say these sort of things, remember, I do think that we have some short-term weakness in US dollar coming, and then I think that retest of the top side of the previous sort of falling resistance will come, and then I have a feeling that that may see a little bit more of a sort of sustained US dollar strength move. Of course, the data will come and it'll support this sort of stuff, but that's the general idea that I'm seeing with the setup. So if that is to play out, gold moving to its price target, US dollar moving back to its retest, how's it going to affect Aussie? Well, Aussie's going to move, one, with strong gold prices, and two, even though it's not part of DXY, DXY is representative of US dollar strength, broadly US dollar strength across the market. That's going to give Aussie a chance to move up through this period here. As to how high, well, that remains to be sort of seen with it all. But it does give a little bit of short-term upside for Aussie. Now, Aussie's sort of, as I said, I'm not a big Elliott wave person, but as I take it, it's 1, 2, 3, 4. We get the break above here, particularly up around 68 or above 68, then, okay, we're coming up into a fifth thing. I think, and this is why I think that sort of potentially we could see a little bit more sustained US dollar strength, because if we see US dollar sell off, we see gold move up, Aussie will give a chance to move up here. What happens when DXY, if this is the scenario that I'm playing as well, this isn't the gospel, this is just how I'm sort of seeing it. But what happens when gold hits its price target, US dollar hits its retest, and say it does bounce, and then we get a sustained move of US dollar strength. I think that's going to put in a medium term high for Aussie. As to whether that's up here for a double top, and maybe we just make a big range through here, that's fine. We trade between 69.50 and 67 potentially, and just peter out to the side in quite a large range, mind you. It could also, I think, has the more chance to give it a lower high, which then would go in line with a little bit more medium-term US dollar strength. Because you got to think, if we get it up a rally up to here and it fails and comes down here, this is a large move, and that's a lower high on a large move. So you'd be then grabbing your high and your low here, and you'd be saying, okay, well, we've put in a lower high. That's the first signal of change in trend in reversal. And I'm not talking like a pushback down here. I'm talking like a sustained up, down, and then bang, pushing down. And if we say come back down here and we test 67 and say you come down and you break 67, then you're looking at something like this, which, you know, again, it doesn't mean it's not Aussie melting down. It's not Aussie like this period here. This is just mayhem. But because Aussie's still got RBA in their corner, quite hawkish, it means it'd be a bit more of a sort of slow grind down. And if we see a little bit of continued, like sort of medium term DXY strength, that could also give medium term Aussie weakness. And in this sort of scenario, we've put in a lower high, tests for these, maybe it comes down here, makes a new low, lower high, lower low, that's confirmation change of trend, and it moves up like this and then sort of snaps people out. And we start looking to sell into rallies. At the moment, we're pretty much buying dips. We're selling down through these periods. Well, I've been selling. I've actually done very well. I've been buying here, selling here, buying here, selling here, and I've been buying at the moment here. So, yeah, I mean, I have been quite fortunate to be sort of reading this and playing the Aussie side very well recently. But to me, it seems like once you take all these things into account, gold, DXY, and now I'm looking at Aussie, that this could potentially be something, because I think DXY is obviously the main driver with all these sort of things. You know, if it does do that backtest, because remember, if it's been heavily sold down, it's finally broken out, Like, remember the thing with the DXY, and this is just to flip back again, and I know I'm repeating myself. This whole period here, nothing had actually changed with the rates up to here. All this move down here was them just speculating and pricing it in. When the actual rate cut came, was this period just here. I'm like, just this candle here. That's actually what happened with the 50 basis point cut. Like it was as nothing compared to all the positioning and pricing in that the market had done. So the fact that it's been bashed down, bashed down, bashed down, and now it's actually pushed up and broken out, I think you need to respect that. I think you need to respect the fact that it's broken out, and you need to, like anything, you get your breakout candle, you get your back test. That generally 99% of the time comes, and it's generally lower than the breakout level. And we know DXY doesn't mind a 61% pullback. It comes back down here, and then if we get this push through here, that's what I'm talking about for the medium term sort of US dollar strength. So get back to Aussie. I feel that that could potentially see as DXY does its backtest, we get this push up here as whether it goes, here, whatever. We'll play that as it comes. But if DXY sort of does a backtest and then decides to sort of look like it's going to rally again a second time, I'd be watching out for Aussie longs. I'd be sort of like, being pretty sort of cautious. And I'd be sort of looking more to sort of sell into rallies and look for this kind of move through, I guess, the next couple of months. Like we've got the election coming up soon, so that's obviously going to play into things as well. I think it's about a month away or so, maybe a little bit under it now. So yeah, that's pretty much how I'll be looking. So in the short term, this as the week sort of starts, I'll be looking for this little breakthrough here. Look, this pullback could obviously see a little bit of a push down here. If I get a shot down at what's this 67.30s, fill these candles over here. I'll still be buying these ones down here in the idea that this is the move that we are sort of going to be seeing as a break to the top side. I think sort of short term, gold pushing up, DXY looking like it's a bit exhausted, Aussie testing this falling resistance. A second push through here, I think, will be a good sort of little confirmation. And that should give us about sort of at least a sort of 70, 80 point move to the top side. And then obviously just play it by ear as the data is sort of presented to us sort of throughout the week as well. Do have to be a little bit cautious here on the 4 hour. It is sort of oversold. Daily, again, look, this is another thing that makes you sort of think that, look, there could be a little bit of an upside through here. It is sort of a little bit weak on its sort of crossover, but it has crossed over. So as I said, you want that confirmation. Get above these wicks over here, 67.60. And I would say, let's go that. Let's call this one here. Other strength. It's above 70. That's what I'll be looking for. The RSI is there to support it. Gold looks like it wants to go. DXY looks like it wants to calm down a little bit, for at least for a medium term. All right, flip across, and copper playing very well here. As we said, look, this is the little chart that we played out for it all. I did miss my entries on this as well. I missed them very, very close, couple of 100 points or so. When these things are in sort of multiple thousands of points and that, missing, well, mine was on this little 50% retracement here, so I missed by like 100 points or something. Frustrating, but it did sort of come. So we've got the pushback here, we've got the pushback up. Now you want to see this come back up over here and test this level over here. That's what you're looking for here. That little line that I did have up to here a second ago was just showing what could happen if it did fail at this level. If it does fail before coming into contact with this top line, I think that's going to be an early indicator. So say it comes up to even just say here, a failure to continue this chart, this little channel, means I think we're going to be seeing deeper lows. You want to see with channels, top, bottom, top, bottom, top, and if it comes up here and touches that, it doesn't matter. Even if it comes into contact with this and then sort of continues down here, that's fine because it's at least sort of like respecting the chart. But if it doesn't, if it sort of if it sort of fails a little bit early, like here, and then sells back down, then I think that is going to show that the sellers aren't waiting for it to come up here. They're going, look, I'm just going to jump down and move down, and the pressure's moving down. The pressure will continue to push down, and I think we could look for lower kind of sort of pullbacks, as to where it goes, well, we'll work that out. But that's just the general flow idea. So look, with this, we're oversold. It's already not quite crossed over with the RSI. You would want to sort of see this again above, say, sort of 4.52. Let's check on the 4 hour, because this is the thing, and this is why I sort of say these things, time and time again. Excuse me. Support and resistance, same thing. Support, broke through. Retest, resistance. Down, find support, comes back up. Retesting exactly where we thought it may sort of come to. It doesn't mean it's going to stop here. As I said, I think it'll probably sort of come back up here, which will sort of complete the body of this fall down over here. So this is an area that I'd be interested in. Ooh. This rough area here means a little bit of sort of upside, I would say. Look, this could sort of push back down early, grab some liquidity, then come back up. So main thing you want to sort of be paying attention to is this falling resistance here. Touch up of that, that's fine. Break through, well, there we know what's happening. Rejection down there, we know what's happening. But you just want to see is it going to come up to this area here. If it fails early, I think we're going to come down a little bit further. I'm not talking just a little push stack. I'm talking like, take out these sort of levels down here. You need to sort of be getting below, say, 445 or so. To sort of call that as a failed area, because as you can see, up, down, it can sort of fling around a little bit with copper. So I think that, as I said, with metals pushing up, I think it's just going to drag a lot of the metals market with it. And finally, finish off with China. China, we saw this sort of double top sort of formation come in here. We have broken through this sort of rising support now. It is trying to hold it. Again, you don't worry about the last couple of hours, particularly with China. I would say that sort of like, again, a little bit of fluffing around here, but I would say you see some downside with this here. And again, this goes in line. If you see this pushing down here, because remember, if this was the channel, you've got a top, you've got a bottom, you've got a top, you've got a bottom. You would have wanted to see this come up here. That's fine. We continue. Early indicator is the failure to continue the channel. Comes up, double top. It's where sellers were once. And remember, this was the measured move. That's why the sellers stepped in here. We had the head and shoulders, neckline, head, gives us our measured move up to the top here. Sellers stepped in, pushed it down, came up here. Sellers stepped in again, pushed it down, came up. Sellers have moved down their little sell. They didn't even wait for it to get up that extra couple of points. They sort of pushed it back down. We've now gone through this rising support. This is the alert, 7045. Underneath that, confirmation, coming back down, retest the lows down over here. That's my play. And again, if this does play out, I mean, look, all this could be incredibly off. So you got to play it. But this is how I'm saying that you may potentially see a stronger yuan, weaker US dollar. Stronger yuan, better for the Aussie. So Aussie up, yuan strengthening, so pushing this chart down, gold up. These things all seem to sort of line up a little bit for me, and this is how I'm going to be sort of approaching the week. We've also got, just on the topic of China, we've got PBOC, I think it's them, they're the people, announcing potentially more stimulus as well come this week. I think over the weekend is the meeting. Maybe that's weekend, so it's in Monday morning, Australia time, but we'll see. That is coming soon, and I think that if it does come with more stimulus, is going to be pushing down, because if we again go onto the stock market, this is what the call was, a pushback. Look, this was bound to come, and obviously it did, and came in quite a dramatic fashion. If they come out with more stimulus, this is what we're going to see. We're going to see another big leg up. It's not necessarily going to come to this level, but it's going to go bang. It's going to push up. They'll like that. It's going to give one a bit of a sort of kick on. That's going to help Aussie. It's going to sort of probably knock US dollar a little bit. So they're supporting things that could be happening to sort of break these charts as well. As we are seeing here, this is on the daily. Look, it hasn't broken down yet. And that's why we've got the alert down over here, but you're oversold and rolling over down here. This, to me, says that we might see some medium-term US dollar weakness pushing down to this side here, which goes in line with the other charts that I've just covered as well. So, yeah, there's a couple of things that are trying to line up at the moment. As to whether it goes all the way down, well, that remains to be seen. But I think definitely back towards this price target is where we could be sort of looking, particularly if we get underneath this alert over here. And that'll be bullish for Aussie. We'll probably see gold kick up. We'll see US dollar sell down because, again, this is US dollar basically, but more affecting maybe Asian markets. All right, cool. So where we are, 44 minutes. Have a look at what news we do have coming up this week. Let's get on to. All right, so what have we got? Bank holiday Japan on Monday. A little bit of China data coming out. Okay, 14th and 15th. So they have this will be their sort of like probably during whatever meeting that is going on 14th and 15th. So the Monday, Tuesday. This is probably when they're going to be sort of announcing some sort of stimulus. We've got bank holidays in US and Canada. So Monday's going to be a little bit wishy-washy. We'll see how it goes. Come Tuesday, Asia has just been super quiet for data recently. We haven't got anything through the day on Monday, nothing through the day on Tuesday. Coming into Wednesday, we got sort of that's quarter on quarter. I was like, geez, that's very low for New Zealand, their CPI. But that's quarter on quarter. Won't really affect things too much, I don't think. They just did a massive cut, 50 base point this week anyway. Got some speakers for the Aussie. Again, nothing through Wednesday. Thursday, we've got unemployment. Oh my God, come on. I love these guys. They're just so wrong every single time. Look, 22, 38. This is the highest one they put in and went to 39. And then they're like, no, 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 no. Look, we tried to sort of think it would go a bit higher. We got it wrong anyway. Let's go back to our normal 20. 20, 50, 20, 58, 26, 47, 25. One of these days they've got to get it right. They will. It'll be a shocker. But these ones, they've been notoriously wrong for the last 6 months. Probably even longer, but that's as much data as we have in front of us right there. This is going to weigh on Aussie a little bit here. And it'll be important to see. Strong numbers, strong for Aussie. Unemployment, lower, stronger for Aussie. If unemployment goes up, that's one of the conditions that they've been saying they want to see before they decide to sort of cut rates. And, we pretty much resigned to the fact that it's not happening this year. I think Feb is like sort of pretty much the general consensus of things. Obviously, that you need the data to support these things, but one of the conditions is unemployment moving up. So again, you got to play these things out. Unemployment up, economy struggling. RBA helps them. RBA helps them by lowering rates. You see what I mean? Like it all comes back to that. You got to go, this does this, does this. There's a whole bunch of cogs. If I turn this cog this way, this happens this way, this happens, boom, boom, boom. So what they're looking for is a higher number of unemployment because that shows weakness. Like, people are sort of obviously struggling a bit more with these higher rates. They don't want it to get too high, of course, but 4.2 is still quite low. So, if that stays low or if that goes down, that'll be strong for Aussie. If it goes up, it'll be weak for Aussie. Employment change. If they get high numbers, well, again, what does it mean? It means that these companies and the people that are adding jobs to the economy are they're not worried. They're not sort of scared. They're not unable to pay the people that they've already got because they're taking on more people. If you're worried about what you're going to be able to pay next month, can I pay my staff? Can I pay my rent? Can I pay my overheads? Well, probably not. So let's add on more jobs. It just doesn't work like that. So the conditions that a company or as a company economy as a whole would be is if they're not adding jobs, it's because they're worried or they're running out of cash available. And that's when the RBA goes, okay, wow, it is hurting them a bit. We need to maybe just loosen off a little bit. And that's more in the rates weakening camp. See what I mean? So if the numbers are high, then the RBA is going to be like, well, look, rates are high, but people are still employing people, so it can't really be doing too hard a job. So that's will be sort of a higher number, strong for the Aussie. So that's the first bit of data for the week that's really going to be sort of impacting things. US dollar DXY is going to be what we're going to be looking for Aussie. up until this point, for sure. Moving forward through there, business composite, we just get no data, no predictions, no previous for any of this sort of stuff here. We got core retail sales. This is another third tier bit of data, I call it, even though it's a put high rate here. Yeah, I call these retail and unemployment claims. I remember these ones again. So they think they're going to be going back down. You know, they think this is just a flare up week. So again, this was the big mover this week. It was more impactful than CPI. If you get another high number on this, again, same sort of thing. Unemployment. High number means people are struggling, means the Fed need to do something to help them. What can they do? They can lower rates. That's weak for their US dollar. So that's one to watch out for. Retail sales. These are things. If they're ticking up, then it means that people have got a lot of money, well, a lot of spare money, and they're still going out and spending. So high retail numbers means that sort of like, they've got a bit of money to splash around. So, higher rates aren't hurting them so much. They can maintain higher rates for longer. Lower numbers on these kind of things, again, economy's struggling. Retail sales are going down because nobody's got so any money because they're paying their home loans. Well, the economy needs to do something. They've got a different home loan system in that than we do in Australia, but the idea is still generally the same, and these are just examples. But so yeah, a high number here for retail sales will be strong for the US dollar. Low number will be a weaker sort of thing. And these are the kind of things that I'm talking about where we're sort of looking for these third tier bits of data. We've had all the big ones more recently, NFP, CPI, and FOMC in the last couple of weeks. So now we're looking to the third tier bits of data. These are the ones that are going to be very important because if you get high numbers here, so this is the scenario, if you've got high unemployment claims, so people are struggling, then they're going on their version of the dole, they're sort of the numbers are rising with unemployment. If retail sales are going down, that means that sort of like, obviously people are out of jobs because they're sort of they're going for unemployment. The people that have still got money to spend just aren't spending it, and maybe they're out of the money to spend. Those are the two things. If you see that combination, weak retail sales and unemployment claims up, that's the kind of thing that's really going to hurt US dollar because that's where you see them talking about, oh, well, maybe we need to do another 50 base point. So that's definitely one to watch out for. So Thursday's kind of the news day for the week. And then sort of pushing on through the rest. Got a bit of China data, coming out on the Friday, and then that's pretty good. So all in all, a pretty quiet week up until Thursday. So start of the week will be pretty subdued. All right, that's it from me.